Okay, 3, 2, 1. Here we come, you guys. Sorry for being a little tardy today. We're a couple minutes late. That's okay. We've got a jam-packed agenda for you, Anthony. 27 slides, you guys. Each one of the 16 miners that we cover on the channel. We've got Sebastian coming to join us in about 40 minutes from now. And we're going to have a great discussion on the miners and what we're seeing in terms of the share price this week. So, Anthony, welcome to the channel. How are you doing this morning, buddy?
Doing really well.
Excited to talk some miners or what? How are Bitcoin's rebounding quite nicely here. I had to just redo our intro slide because we're getting a little bounce. Are you feeling optimistic about the day?
Always optimistic. Yeah.
Always optimistic. All right. Well, we'll jump right into it. I'm glad to see you got the background going. We're still working through some of the new Mac growing challenges here. But we've got Anthony online. We've got our new microphones, our new MacBooks, and we're ready to talk some Bitcoin. So, Anthony, as I just mentioned in the intro there, I had to re-pull this slide about 10 minutes ago because we've seen a big upward move in the price of Bitcoin. It was close to 55,800 about an hour ago when I took the initial screenshot, and now flirting up close to 57,000 again. You can see quite a big valley shown on the screen there, bottom right. What do you think caused the reversal here? I know we had the presidential debate last night. We'll talk about that in a second here, Anthony, but anything driving the Bitcoin market this morning?
Not seeing anything specific out there. I mean, there's been no sort of like really bad news. I don't know. I'm not sort of like, entrenched in the US political landscape at the moment. I know there was a debate last night, but no, I mean, it's like you say, dropped down to, just above 55,000. It's over 57,000 at the moment. So,
yeah, it's nice to see. We'll talk about hash price in a second. Obviously, been difficult operating environment for the miners over the last few weeks, to say the least. You'll notice market cap on Bitcoin as well on coinmarketcap.com here, Anthony. So nice to see we're still over the $1 trillion market cap despite these recent pullbacks. Now, I just mentioned Sebastian will be on. He's going to be joining us around 10:45. You guys really doesn't need an introduction. I'm sure most of the people watching this video are very familiar with Sebastian, his content, and will be great to get his analysis. We are going to be covering the new CleanSpark deal or discussion about that news that just dropped this morning. And obviously all of the other miners that Sebastian covers on his channel regularly. Now, Anthony, moving along into some of the more macro environment here, pretty interesting chart. So this one compares the price of Bitcoin to the difficulty. You can also put hash price on in blue, which I've taken off just because it was a little, I guess, busy. But this one, Anthony, we've seen difficulty go up again. You'll see on the red line graph there, you guys, jut up to the very top right of the screen. What are you seeing in terms of the landscape macro-wise in terms of difficulty and Bitcoin price right now, Anthony?
Well, the Bitcoin price has steadily come down from its highs back in March, but the difficulty is just basically risen all the way for the last 12 months in one direction, effectively. There's not many periods where it's actually, come back down. It came down, not the first time after the halving, but I think the next adjustment, the second adjustment after the halving, it came down a little bit, then it's bounced back again. So we're into sort of like all-time highs for difficulty at the moment. And you can see there that the hash price is hovering around the $40 per petahash per day. So not great for mining companies, because with that difficulty going up, it means there's more hash rate on the global hash rate, and therefore it means production of Bitcoin is going to be, or issue of Bitcoins, rewards of Bitcoin are going to be spread across more mining machines. So every miner will lose a small percentage again as we go through this difficulty adjustment.
Oh, sorry, Anthony was just on mute there. Makes sense. It's going to be interesting to see where this difficulty tops out at, because at some point here, you're going to have to see a reversal, you would think, Anthony, depending, I guess, on a lot of factors right now. But in terms of global hash rate, we're continuing to see new miners plugged in, bigger and bigger facilities, more efficient machines. That trend specifically doesn't seem to be changing anytime soon, hey?
No, No. These North America, that's Canada and the US, have got about 40% of the global hash rate. We know that 6 or 7 of these big miners are growing massive hash rate this year, and they're bringing in these latest machines, the S21 Pros, the equivalent Canaan and Micro BT models. And so, a significant amount of hash rate will come on in the US and in Canada, and it'll all be more efficient mining machines. So that means that, potentially the global hash rate keeps rising. And the only thing I can think of is that, there's miners around the world that are accessing energy at ridiculously low prices, because the challenge now is with the hash price at 40, you need energy costs and efficient miners. You need a two-pronged attack to try and get a margin out of this game. Even I read this morning that from Luxor, they said that if you had S19 XPs and your energy was 6 cents a kilowatt hour, it would take you 31 months to effectively get a return on your investment. 31 months, that's 5 months short of 3 years. And that's to get start getting a return. So you ain't getting a return the first 31 months. And, you've got to pay for the mining machines and pay for the energy. So they've done a calculation there. And with some of the other models, I think the S21 takes 34 months. So it's a more expensive miner, massively more efficient. But what they were highlighting was, at the moment, the S19 XP, if you get a batch that are really working 100%, they're probably the best miners on the market at the moment for delivering a return, because the price is significantly lower now. Because they brought out more advanced models, mining machines, you can get these older models. A bit like, the analogy would be like the the iPhone 16 is due to come out. What happens to the prices for the 15, 14, and 13 once that iPhone 16 comes out? There's nothing wrong with the phones. The phone was perfectly fine when they brought it out. If you get a new iPhone 13 in a box and you pay $250 instead of buying an S16 for $1,000, is that $750 of benefit from the S16? For the iPhone 16, and therefore that's the sort of conundrum you've got with sort of like with mining machines as well. The XPs, we're only talking 2 years ago, they were like the most efficient miner on the market, and now they've been overtaken by a number of models. But with the pricing dropping on those those S19 XPs, your return on investment is quicker. Even if your cost of energy is 6 cents, and we haven't seen many miners come out and say they're paying 6 cents. Now, some of them are paying 6 cents with a hosted deal. So Marathon were paying 6.6, I think, and Bit Digital were paying about 6.6, 6.7 cents for a hosting deal. So that's the challenge that you've got out there. But when we talk about the likes of Soluna, we talk CIFR, we talk TeraWulf, we talk Riot. These are mining companies that are getting energy at significantly lower than 6 cents. So they'll be able to get a return. But I think this is for the ordinary person out in the Republic. I mean, there's no chance in the UK or Europe you're going to get those sort of prices. Maybe in Scandinavia, in the high up in Sweden or in Finland, where the weather's cold and they have probably more hydroelectricity than they actually need to support the domestic and industrial requirements. But the UK prices will be 6 or 7 times what the miners are paying in the US. So there's no benefit unless you're getting free energy in the UK to actually mine Bitcoin, or you're getting sort of like methane gas converted into energy, and you're getting it at a really low rate, because there's nothing they can do with the methane gas. It's, the conversion process to electricity gives you a benefit that way. But other than that, you ain't mining Bitcoin.
Fair enough. Now, you talk about the payback period for some of these machines. That would not include any SG&A or overhead or anything additional outside depreciation and energy. Is that correct, Anthony?
Sorry, repeat that. Sorry.
You were just talking about some of the payback periods for different models of machines in the 30-month, 31-month. That's only depreciation and energy, not any SG&A or additional overhead included, correct?
That's the cost of energy and the cost of the machine, yeah.
Yeah, so these miners are obviously going to have additional costs on top of that would further extend the payback period. So that's really what I'm worried about with the HPC side of things as well, as we start to see some of these H100s.
I think, yeah, and I think if you think about it, Luxor are putting out, you know, an update on this, and I think what they're looking for is to people to buy the machines through them. They will manage the service on their behalf.
Gotcha.
And in a similar way, you know, Compass Mining operate a very similar position in that as well. So you don't have SG&A costs when you're a retail investor. You know, you're going to pay an energy cost, and you're going to be paying for the mining machines. And what looks for highlighting there, probably more to the retail side, they won't be advertising those machines to the likes of, you know, Riot and Bitfarms and Core Scientific. They'll have their own negotiations with these big suppliers themselves. Makes
sense. Yeah, the payback period specifically is one of interest for me. Like I say, with the HPC side of things as well. So curious to see that play out. Now, in terms of the mid-morning market update, Anthony, again, this was taken about an hour ago. At that point in time, Gryphon was the only company in the green. Now, I looked a little more recently. Gryphon was up closer to 5%, still in the green. Interestingly enough, CleanSpark falling behind this morning, down nearly 8% at the time this was taken. I feel like it may have improved a little bit if you have your phone up there, Anthony. But
yeah,
CleanSpark
down just over 2% now. Yeah.
Down. I mean, that's a big deal this morning, so that's interesting to see.
Massive deal this morning, you know, and that does surprise me. I thought there'd be, you know, that sort of news is additional news. So not only have they purchased some sites that will deliver, once they've installed the latest S21 miners, an extra 5 exahash. That's now taking their total for the year. Their new growth target will now be 37 exahash as opposed to 32 exahash. So they're actually increasing in the same way we've seen other miners, you know, buy some or acquire a new miner or acquire some sites. They're increasing their current. So this isn't them trying to help them achieve 32. This is them being bold and saying, you know, we've just bought some more sites, and we're going to fit all the latest machines in those sites. They're ready to, they're turnkey sites ready to go now. And effectively, you know, they're aiming to get to 37. Now we will see a big jump in September. They're planning on getting to 28 exahash during the month of September. They were just under 23 exahash or 23 exahash at the end of August, just slightly behind Riot. So it looks now that these two are in a sort of like in a standoff, because Riot also would increase when they purchased their block. Their hash rate went up to 36 exahash. So I'm just wondering if Jason and the gang at Riot will be looking to maybe come out with some idea to improve their position by the end of the year, because it's going to be bragging rights here. Who's going to finish, maybe second behind Marathon? It looks like Marathon are at 35 already. They've got, you know, the best part of 3.5 months to grow. They've got a target of 50, and they're still using that target. So we might see some big updates from Marathon. But second place is definitely up for grabs. You know, you've got a number of miners that are aiming to get close and above that 30 exahash now.
Yeah, it's going to be really interesting to see these final few months of the year as the racehorses come into the stable here, Anthony. Interesting from my perspective to see the different strategies. We have the big single site operators, the IREN, the Riots, going forward with those massive single construction sites, learning as they go through each building. And then we've got some of these other miners really going for a more spread out, diversified approach with some of these smaller sites and just packing them full of the brand new machines. So an interesting one to watch. We need Bitcoin to turn around here, Anthony, or we're going to be fighting for the biggest company that's mining a non-profitable asset right now. So hopefully the technician guys are right and we start to see that move towards
it was interesting yesterday. There was a panel at the H.C. Wainwright conference in New York, and on the panel, it was hosted by Anthony Scaramucci, who's a well-known investor, TV personality as well. Now spends a lot of time on the financial TV shows, and he was hosting a panel that had Ben Gagnon, Fred Thiel, Adam Sullivan, Zach Radford, and Sam Tabar. So had 5 miners on there, and the last question he asked them was, where do you see the Bitcoin price by the end of 2025? and I think Sam and Zach, were sort of saying, 130,000. I think Fred Teal said 100,000. Adam was sort of in that 130, 150,000. And I think Ben came out with something like, based on previous cycles and looking at hash price, he expected it over 200,000 by the end of next year. So it was interesting to see those people, but some of them were quite selective on not going overboard. I mean, people were talking about 100,000 this year, but this was a question for actually where we finish next year. So I think Fred said 100,000. So he was the most pessimistic, I think, of the five. But it was if people haven't seen that discussion for an hour, they probably need to try and search it. It's on Spaces, it's on maybe on YouTube now, but certainly worth an hour to review that. And there's some really good questions and some great answers as well. So look into that. And I was quite impressed with Ben Gagnon with his answers, because you got to remember, Ben's got the added advantage. They're all CEOs, but Ben knows Bitcoin mining inside out. I mean, he's been there since the beginning. And actually, interestingly, listen to what Adam Sullivan says, because Adam Sullivan was mining Bitcoin back in 2013-14 in his apartment. And he was using more electricity in his apartment than the building that he was in and the next building to it added together. So it was really good listening to that. So definitely worth, if you've got an hour spare and you want to listen to a good podcast with 5 CEOs in the mining space, getting questions at a big institutional conference, certainly put that on your list to watch. I enjoyed listening to it last night.
You're totally right about Ben. I actually posted a clip from that on Twitter, Anthony. Very good response to a lot of the questions that I thought were thrown at these guys, and a very interesting venue as well. You could tell this is a high grade, high quality institutional class event. So great to see that recognition. I totally concur. If you guys haven't seen that, definitely check it out. Some more news that came out last night, Anthony, a little bit late for you probably to watch the presidential debate, but I was able to catch that last night. In addition to that, Taylor Swift came out with support of Kamala Harris after the fact. So fairly strong showing for Kamala Harris. I thought she performed really well. Obviously not as supportive around Bitcoin or crypto as maybe Trump or RFK Jr. have been. And actually attended that Bitcoin conference. So Bitcoin definitely pulled back a little bit. That may have been part of the reason for this morning's pullback, but nonetheless, not a lot of discussion really at all about Bitcoin or crypto on last night's event.
No, I didn't get to see it myself, so I can't really comment. I've seen some of the tweets this morning suggesting that ABC provided the questions to Camilla, or she had an earpiece in, knowing what was coming up. So, but I, as I say, we've had this discussion before about politics worldwide, and just when you think your own country's having problems, there's another country out there that's just in as equally bad space as what we were. We went through this a few years ago. I think we had 5 prime ministers in the space of like 2 years. So, Canada as well, not set themselves alight in over there with their recent politics. And every country, I think we said before, I think we were looking at great leaders, and the one that we saw was New Zealand, and she decided to leave the job and go and spend time with the family. So it is a challenge out there to get, we had, years ago we had strong leaders across all the big G7 nations, really strong characters. Now, a lot of them are sort of like who people don't really know who they are. They're not big personalities anymore. So it'll be interesting space to go into, but we'll see what the election brings. Look, the surveys still have Trump ahead, apparently. So we'll wait and see.
We definitely will. Going to be interesting again to see that follow through in the next few months. We're getting a ton of comments right now back and forth about Riot. So maybe we'll be starting with Riot today, Anthony, but 2 more slides before we do. The other clips I wanted to bring up here, again, HODL 15 Capital for both of these visuals, you guys. Second consecutive day of inflows to the ETF, so $117 million on the 10th of September. That was followed by a strong 100 million plus on Monday as well. So nice to see that reversal. Anthony, I think you highlighted yesterday in our video, we had about 8 days of red outflows. So nice to see that reversing. The other thing, Anthony, so this does not include Bitcoin miners, so not the companies we talk about, But this is an interesting list from HODL 15 Capital showing other companies in other sectors that have Bitcoin on their balance sheet. So we talk a lot about on our channel adoption of Bitcoin, Bitcoin reserve, Bitcoin balance sheet strategy. It seems now we've obviously talked about MicroStrategy, Tesla, Coinbase, some of the big ones on the channel, but it seems there's quite a bit good group now that have started to adopt Bitcoin on their balance sheet. Do you see this trend continuing as more companies continue to report earnings, Anthony?
Yeah, I mean, I would expect so. I mean, go back a couple of years ago, there wasn't very many companies that would go into this space. Now it looks like there's more adoption going ahead. I mean, we know that that Tesla bought Bitcoin back in 2021, and that gave the Bitcoin price a bit of a surge up to its all-time high that year of like 69,000. So, a good piece of news like that there. We've had the ETFs this year that I've, just bought significant amounts, and there's no ETFs on there either. So as well as mining companies, no ETFs on that list, because the ETFs would certainly one of the ETFs would be higher than MicroStrategy, and and maybe a couple of other ones would, well, most of the ETFs would certainly be ahead of Tesla, and maybe be just below MicroStrategy or some of them. But there's some big Bitcoin held on those ETFs. We've seen that this year. I mean, we've had 8 days and $1 billion went out, but we had some massive days already this year in the first 6 months where there was, some days 8,000-9,000 coins been purchased. And bear in mind, at the moment, there's only 450 being produced a day. So, you go out there and buy 8,000 coins, you're buying 20 days worth of Bitcoin that can be produced. So that's going to be, an interesting. But I expect more companies to have an amount on the balance sheet, just like retail investors. It's sensible to have a little bit of Bitcoin in your wallet. Nothing that will, if everything went sour would cripple you. But I have a small amount of Bitcoin. Well, it's not a small amount now, but it was a small amount when I bought it. But the price of Bitcoin has done well since I bought mine. And but it's I've never sold any. Just keep it there. Don't check the price every day like you used to. So
yeah. Hey, and just as you mentioned that, Anthony, right above the HODL 15 Capital number there, the 116.96, you'll notice exactly what you said, Anthony. 450 Bitcoin mined worldwide per day. Yesterday, 2,064 purchased with that 117 million. So
that wasn't a big day. That wasn't a big day yesterday. We've had massive days. We've had days where there's 10, 12,000 been bought in a day. So, it's there's not a massive supply of this around, and they still say it's 70% of people haven't moved in the last couple of years. So, I'm one of those 70%. Mine hasn't moved off its wallet in the last 3 years. So, where they buying it from? Who's actually selling it? That's what I want to know. Put a list of names up. Who's selling it? Maybe we highlight them if we can. So.
Well, we'll have to go over to Germany, maybe on a day off from Amsterdam. We'll go talk to them, see why they were selling all that Bitcoin, Anthony.
They did sell it, yeah.
2 more macro slides, and then we're going to go to Riot first, you guys, just based on the comments here. So these prices have actually gone up, but if you're in the Amsterdam region, we're going to be there for a week, first week of October. Bitcoin Amsterdam is going to be taking place the 9th and 10th. We're both going to be speaking, similar to Nashville. Looking forward to this event. They even gave us our own discount code, Anthony, 10% off. If you're in the region, you guys, it'd be great to see you. Whether or not you come to the event, let us know. We're going to be doing a meetup for all of our subscribers. We did the same thing in Nashville. It was absolutely fantastic. So we look forward to seeing you there. And the final slide, Anthony, is just our week in review. So a couple of good videos this week, you guys. We're doing a shorter format now, 30-minute format for our weekday videos, putting out more videos, I guess more focused content. So make sure you check that out. We had most of the companies, if not all of them now, report their August numbers. We did a production update for each and every one of them. And then we talked about some of the Bitcoin price action here to kick off the week. Now, Anthony, we're up to 80 people concurrent. You guys smash the like button. We should be at 80 right now. Anthony loves it. And first off, we're going to talk Riot. So, Anthony, I've done my best to pull some, I guess, interesting visuals from the most recent press releases and tweets from these companies. With Riot, What I was interested in here was August production results in addition to their exahash growth targets you can see on the right. So you just talk about these companies jockeying for that top position by the end of Q4 of this year. Riot's well into the 30 range, targeting over 40 next year. First question for you, how are you feeling about Riot achieving these growth plans? You've been steadfast all year saying they're going to make it no matter what.
Right. So firstly, I believe they're going to get the machines installed by the end of the year to get to 36 exahash. No doubt about that. There, the Corsicana site, literally down to its last quarter now, energized in April. We've had 2 buildings fully energized out the 4. The 3rd building, B1, will imminently come online. The machines are in there, and the immersion cooling tanks. Now they're building out the 4th building. And bear in mind now they've got experience of building the first 3, so they'll have really learned a lot from those 3 buildings. So the time frame going through this now, they're not going to have any sort of, I don't think they'll have serious weather conditions. They've realized how it's best to build these machines. So they'll put the shell of the building up first and then do the groundworks while the shell's up. So it gives them protection from any inclement weather. So getting the machines installed is one thing. Getting the machines switched on and operating is absolutely totally another thing there. And so people will know if they've listened to my podcast or listened to our podcast over the last 8-9 months, and also in my updates for the last 2 years. I'd say the majority of monthly updates from Riot have been wanting. They've not produced enough Bitcoin during those months. Now we had a couple of great months last year in August and September and July, I think, when they were able to get significant amounts of energy credits, far more than they were achieving now. So if you look at that table there, August 2023, $28.5 million in energy credits and demand response credits. And today, or in August, 12 months later, it's 6.4 million. So that's a massive jump down there. Now they have reached 23.5 exahash from their 2 facilities. In fact, 3 facilities, because they've also got Block. They purchased Block a couple of months ago, and that's got 1 exahash, growing to about 5 exahash by the end of the year. And if you look at the Rockdale and Corsicana, you can see there how much is actually being in terms of installed hash rate versus what they're actually achieving. So in Rockdale, they've got 14.7 exahash effectively installed, but they're only achieving 8.2 in terms of operational performance. So there's effectively 6.5 exahash missing from Rockdale. Corsicana, again, there's about 2.5 exahash missing from there. So 7.6 has been installed. That's 2 buildings. So that's buildings A1, A2, 7.6 exahash, but they're only achieving an average hash rate of 5.2. And then if you look at the Block facility at Kentucky, they've got 1.2 exahash and they're achieving 1 there. Now, you would expect them to have less operating hash rate because in these hot months, these mining companies do curtail. And actually in Texas, many of them sign up to the 4CP program where they are required to curtail at regular times during every day. So not for long periods, but during the periods where there's high demand. So it could be breakfast when people are having breakfast and coffee in the morning. And it could be early evening. So there'll be set times. And the miners are usually notified 24 hours in advance of what the times are for the following day. And so these mining machines will shut down there. Now, we have more than 1 miner in Texas. We have Bitdeer, we have CIFR, we have Argo. So these mining companies are all also, and Bitdeer, they're literally 400 yards away from Rockdale, from the facility that Riot have there. So they're in the same location. And they've got a big site down there. They've got like a 500 megawatt site down there. So, but we don't sort of see the same level of disruption to their hash rate. So this is where it sort of gets disappointing. Yes, Riot's strategy is to underclock and to switch off and to try and get the cheapest cost taken account of the energy credits and power sales that they'll do. And if you look at the very bottom line, this is where it gets the real interesting, is the power cost, has gone down from July, where they were paying an average of 3.2 cents to August, where they're paying 2.6 cents. So when we talk about miners having, getting the benefit of having cheap energy, and we've talked about CIFR at 2.7, we've talked about TeraWulf, where they've got the facility at Nautilus, which is 2, and they've got the facility at Lake Mariner, where it's probably over 4 cents a kilowatt hour in the month of August. That 2.6 is effectively it's beating everybody at the moment in terms of power. Now we have seen, Riot's updates from self-mining where they have delivered, really good margins in terms of energy for their operations. It gets a bit challenging when you look at the SG&A costs because they're quite high compared to some of the other miners, but their mining margins are generally really good. So all in all, it's got positive increments in that update, and it's got a few questions. I want to make sure at the end of the year, when they say we've got to 36, that we're starting to see 34, 35 of that exahash switched on, so that we get really good amounts of Bitcoin produced.
Now, Anthony, I wanted to ask you, you talk about that blended all-in power cost. You can see Rockdale on the PPA has 2 cents per kilowatt hour versus Corsicana on the market rate, nearly double. So I wanted to get your take on that. The other thing is, we've specifically asked Jason, is that year-end exahash goal going to be operational? He said it is. You would expect during this curtailment and these power credits, obviously you're not going to be using your full deployed hash rate. But like you say, Anthony, we're missing significant gaps here, bigger than a lot of the mining companies that we cover. Now, Jason, I believe, said, I remember one of the slides talking about curtailment around 4% a year. But keep in mind, during the summer months, that's really where that 4% of the year is concentrated, or whatever that number was. So you're going to see a lot more curtailment now with the temperature versus other months. The other thing we saw come into the screen here is our good friend Sebastian. So Sebastian, welcome to the program. Thanks for making the time today to join. We just started talking about the miners. Riot is actually our first one. So I'll let you maybe throw in your 2 cents there. And we've got a slide loaded up for all 16 miners. We'll get through as many as we can here with you today.
Excellent. Yeah, thanks for having me, guys. Anthony, how you doing? Bryce, thanks again.
Great to see you.
Yeah, what can I say about Riot? Geez, like you were saying, Bryce, that Jason has alluded to in the past that they're going to curtail about 3 to 5% annually. And if it is the case where they're curtailing more so this time of the period where it's warmer, okay, then that's fine. But we need to see, obviously, when we get into September, October numbers, that curtailment should be much, much lower, and especially at Corsicana facility. So I want to see that operational uptime be closer to like 90, 95% at that point.
Yeah, it would be nice. And this is really something, Anthony, you mentioned month after month. This has really been plaguing Riot throughout the year. So hopefully Jason and team can turn it around. Sebastian, you're getting a ton of love in the comment section here, buddy. Now, I thought it'd be interesting. We just talked Riot. Let's flip the script here and talk Bitfarms. So we'll let you go first on this one, I guess, Sebastian. The update I wanted to show on screen here, Ben obviously takes over CEO role. He's backfilled his position. They've now divided it into 2 different positions. So they're going to have a chief infrastructure officer, a CIO, that's going to be taking care of all their infrastructure facilities. Then they're going to have Alex Brammer, who takes over as SVP of global mining operations. So splitting out really the facilities, the infrastructure, and the mining operations. So we can talk about that in a second here. But in terms of the M&A, the conversation between Bitfarms and Riot, I'm curious to get your thoughts, Sebastian, where you stand on this position and whether or not you're invested in either of these companies.
Yeah, so I'm invested still in Bitfarms. I'm not invested in Riot. And the only reason I'm not in Riot is because their operational uptime historically in the past has not been great. So I'm hoping that they improve that going forward. With the M&A, well, the M&A is off the table right now, right, with Riot. They said that they don't have a bid in place for Bitfarms. They just want to put board seats on Bitfarms' board right now. And Riot last week came out saying that they want to at least put in 2 people. Bitfarms came out this week, I believe it was, that they are open to having 1 person, an additional person added to the board from Riot. That would get them to 6 board seats at that time. So there's some negotiations, seems like, going in the background. We'll see what Riot comes back with, whether they're okay with the 1 person or they want to have the 2 people there. But I still think, depending on how the vote goes, now the vote's been pushed back to November 6th instead of October 29th. which isn't too far off from the original date, which is fine. But depending on how the vote goes there, I think that'll be a clue whether or not Riot pursues this even further or not. I think if they don't get the vote their way, they might walk away at that point, I would think.
Do you think they'll continue to hold that stake in Bitfarms that they've acquired, or would you think they would exit that at that point, Sebastian?
I don't know. I mean, it's a good play either way, right? So it was good on them to take a position in Bitfarms, because that way, if Bitfarms stock goes up, with Bitcoin going up potentially here in October and November, they could benefit from it along with the bull run that we might have. So it's kind of like a win-win for them. If they buy Bitfarms, it's a win. If they get to keep the shares there and get maybe 3 to 5x return on it, that's a win there also. So it depends on how they look at it. If they look at it that way, from a revenue stream potentially, they could do that. But if they're just pissed off about not getting their way, they could just sell everything at that point.
What do you mean the bull run that might come, Sebastian? You're worried about the cycle not happening here?
No, I think it's going to happen. I just don't know exactly when it's going to happen. Historically, it happens right around October, November. We get a little bit of a break in December, and then we, kind of trade sideways for a little while into next year until we get back into like later in the fall again, like the third quarter time period. So
Gotcha.
Yeah.
Gotcha. Now, Anthony, we've had the privilege of speaking with Ben a number of times here this year. We talked to him last time about backfilling his position. I think we made a joke that it would be pretty big shoes to fill. What do you think about this announcement, this new strategy of kind of separating these two roles and having two people's expertise to really support the Bitfarms movement going forward?
This is clearly Bitfarms looking at maybe moving into HPC, because you've now got a chief infrastructure officer there who would be focused on getting the right data centers in place for that sort of HPC business. You've still got a mining officer, because Bitfarms' main business is Bitcoin mining. It's only business at the moment, but they have bought that site Sharon in Pennsylvania, and so that's 120 megawatts. They're seeing what everybody else is seeing. They're seeing the discussions that Core Scientific have had with CoreWeave and the updates there, and everybody's looking at that deal and thinking they'd like a similar deal. So the pivot towards HPC, we talked a few weeks ago about having 4 pure play miners, the likes of Bitfarms, Marathon Digital, Riot, and CleanSpark. We're now down to 2. We're down to CleanSpark and Riot, because Marathon have gone 180 degrees on their decision, and they're going full into HPC as well. So it'll just be a case now, do we wait for an announcement from either CleanSpark or Riot to say, well, we got it wrong as well, and we're looking to utilize some of our energy and space? But Bitfarms clearly, although they weren't committal in the podcast, Ben said he wasn't totally blindsided to what was going on out there, and they would look at all the things by announcing these 2 individuals, separating out infrastructure and mining, gives them more, opportunity for having one person focused on the actual delivery of infrastructure to support HPC hosting.
Yeah, that's a really interesting takeaway or observation, Anthony, and I think it makes sense based on the org chart here. Sebastian, question for you. As a Bitfarms holder, are you hoping they get into HPC, or do you like the pure play approach and exposure?
No, I think if they can get into HPC, I think that might be a good thing, but it also depends on the deal that they get. If it's a deal where they have to purchase all the equipment, then maybe not so good. But if they can lease out space, basically, and do it the way that CoreWeave is doing it with Core Scientific as well, that might be beneficial there. And I think the reorg here is really good, right? They're growing tremendously this year, next year as well. They got sites now in the United States more. They're building out there. So you really need to split those roles up a little bit here to help just the person that's doing the day-to-day operations of Bitcoin mining. He can concentrate on all that stuff really well, while the other person that's going to be building out the infrastructure going forward can concentrate on all those things. So I think that's a good move.
Okay, makes sense. Yeah, I think ideally we would want to see HPC with most of these miners. You mentioned Marathon, so I wanted to jump over there as well, Anthony, because they've posted some recent roles specific to HPC as well. I pulled this from their August production results, so we can talk about some of the numbers here or production results, but Marathon as well, you used the term a complete 180, Anthony, similar to their infrastructure light, now more asset owned model. Do you think it's good that these companies are pivoting like this? Do you think it shows maybe that there was some oversight or lack of direction, or do you think they're just responding to the new business environment?
I think they're responding to seeing what the companies are doing. And I had the opportunity a few years ago to have probably about an hour, maybe an hour and a half discussion with Fred Thiel in London, one-to-one, and talked about the asset light model, trying to get his view on why he wasn't looking at infrastructure as every other miner was literally buying sites. He also talked significantly about the immersion cooling, how he was going to introduce that later in the year to get most of his fleet in immersion cooling because he could see the returns on that. This move now into HPC, it's saying something and doing something. That's going to be the challenge. And they have got facilities. If they've got 54% of their fleet now operating in their own facilities, so that's a big increase this year, but it's still not 100%. And for having whatever the theory around asset light, and the theory sounds really good. Why spend millions and millions of dollars on facilities if you can just get someone to look after them for you and pay them a little fee? Well, it goes down to control. And when something goes wrong in these facilities, which miners get looked at first? Does the owner look after his own machines, or does he look after Marathons or another clients? And again, like Riot Platforms over the last few years with their updates, we've talked before about we can count on less than five fingers how many good updates Marathon have had in the last 2 years. There's been about 3. We are seeing improvements in the last few months. We are seeing them now. They're getting over 35 exahash now. They're achieving there. They've got a big target to get to the end of the year, another 15 exahash to add by the end of the year.
Do you think they'll get there, Anthony?
I would have them further down the list than IREN and then Riot. I think IREN and Riot having their own sites, and we can see what they're doing now. We're expecting another massive update from both of these companies, along with CleanSpark in September. So, like in less than 3 weeks' time, we'll see probably another 3 or 4 exahash on all these 3 miners going. I think CleanSpark are going to add about 5 exahash in September. Riot need to add a significant chunk in September as well to reach their sort of Q3 target. Marathon have got, they're running out of days. There's like just over 100 days left now, so they've got 15 exahash to find. We'll need to hear some news, and he's very confident of getting that. He was on the panel yesterday in New York, talking about the 50 exahash and they're going to achieve it. So, let's see if they do. But bear in mind, when we looked at previous years, there's only been a couple of miners in the last 3 years actually reach their target. We saw CleanSpark do it 2 years ago. We saw IREN do it last year. So, this year we're being optimistic and saying there's at least 2 miners we think are going to get to their targets. So there's still another 3 out there that are still driving to get to their targets. But we think there's 2 that should make it because they've got one site. And I don't know what your view is, Seb. Is it similar to that?
Yeah, I think Marathon may get close to it if they don't actually reach it this time around. They're already at 35 exahash. They have, they own what, 55% of the sites now. 45% is still with third parties. So they have a little bit more control over that, and they are doing the immersion switch out on some of the facilities that they do have. So I think they will get there. 15 exahash is quite a bit still. That's still about 75,000 machines roughly if you're talking about the 200 terahash machines. So I think it's doable.
Hey, I see 54% of the 1.1 gigawatt is personally owned. So very good stat there. Now I wanted to get into IREN, you guys. We'll talk about CleanSpark news as well next up. I know that's a big one, and Sebastian, you can probably shed some light there. But IREN, another really interesting one, given their power situation here. So we had Dan on the channel not too long ago talking about, I guess, the hedge or maybe blown hedge in July. You can see the power price or electricity cost in July per Bitcoin, $61,677. Now, Dan explained that situation, how they mitigated, got out of that moving forward. August, basically, or just over, cut the electricity cost in half, sub $30,000. So obviously the right move. an expensive lesson. But similar to your observation on the Riot slide, Anthony, when you look at the amount of credits they got compared to last year or last August, it's just a different situation this year in Texas in terms of the energy grid and its capabilities. And these companies, I think, in a lot of situations, were playing their hand similar to last year.
Yeah, absolutely. I mean, we've calculated that cost to IREN for the 3 months is probably close to about $11 million in terms of that hedge. So, but they've pulled out of it. And bear in mind that the energy price per Bitcoin would have dropped drastically because of the fact they installed, over 5 exahash of the most efficient mining machines during the month as well. So they went from 10.5 exahash to 16 just after the end of or the beginning of September. So, and they were all the latest mining machines there. So that would have helped with the energy price there. But it was great to see that come down there. They're operating probably in a similar way that Riot are operating at Corsicana because they're on the market rate as well. So, but yeah, it's one of those things. Last year they did the same thing. They did the same hedge and they made a lot of money last year out of it. They weren't paying energy prices. I think in July and August last year they were literally getting enough credit to cover their energy costs. There was a zero energy cost for IREN for those couple of months last year. But they tried again this year, but it didn't work out. And that the weather wasn't as hot as normal. There wasn't as much domestic requirement, so the pricing wasn't as volatile as previously. It was a little bit more volatile in August, but in July it was fairly flat, and they took out a hedge expecting it to rise significantly, where they could then benefit from that hedge. And it proved to be a calculating, wrong decision this time. But bear in mind, all these miners have made errors, and hindsight's a great thing. So, the thing is, they've picked themselves up. They were very transparent about it. They kept it in their update. Only 3 miners put out their energy cost per Bitcoin. There's only, I think, TeraWulf, IREN, and SATO technology actually do that. So, kudos to them for being transparent and coming on the podcast and answering that question straight away.
Yeah, for sure. We were joking on our podcast, Sebastian, that Dan and his brother could have got themselves a nice new jet instead of this hedge strategy if they had that hindsight, which is so valuable. Sebastian, the question for you here is right at the bottom of the page. Looking at those juicy profit margins, 98% hardware profit margin. So you could maybe even talk about this a bit better than I can, but IREN's HPC strategy is a lot more vertically integrated than, say, a Bit Digital or a CoreWeave or something like that. So they are actually purchasing these GPUs, giving them even better, bigger margins and the ability to charge more to these end clients. So I wanted to get your take on the strategy here, Sebastian, and kind of supporting our thesis of why it's so important to have HPC exposure within your company.
Yeah, so they are going definitely a different route than what everybody else is going, like Bit Digital or Core Scientific. They spent, what was it, like $20-30 million on these servers to get them up and running, and they're getting about $1.2 million in revenue from them a month right now. So what does that equate to? About 12 million or so. That's why Dan has come out and said that their return on investment, instead of originally thinking it's going to be like 24 months, now we're looking it's going to be more closer to like 30 months potentially, right, on these things. So there is definitely this challenge with them also, is the ROI that you're going to get on it, because it is a lot of cost up front that you're putting out. And then if you don't have a long-term customer there, it's going to be tough. It's kind of, I mean, with them, that's a really tough one, because I think you're better off going the route of Core Scientific, where you have the infrastructure and you let somebody else use it, right? You don't have to outlay that huge capital there to do it. And you get a much faster ROI that way. Whereas if you're buying the GPUs, the servers, everything else that goes into it, your ROI time from now increases. So now you're almost like a 3x on Bitcoin mining machines. Bitcoin mining machines are supposed to be usually 12 to like 16 months ROI on those things. So that's kind of where I see things on it. I think it's nice that they're doing it. They're trying it out. And I think maybe they'll change that position later on going, because it is so expensive. But I don't know. What do you guys think?
I mean, that's sort of, in one way, it's deceiving, that table there, because it's suggesting that 98% is the margin there, but there's no cost of the actual GPUs in that cost. So you're quite right. When they bought those GPUs, I think around about $30 million, Dan was saying it takes 2 years to get the return on those.
Yeah.
And then you start making money in the third year. But bear in mind, you've still got to pay energy, staff, facilities on top of what you pay for the GPU. So I think the model that IREN and sort of the likes of Hive Digital, and actually to a certain extent, Bit Digital have done something similar. They are leasing their GPUs. So they bought the GPUs initially, then they've done it on a lease. A buyback lease where they've got someone to buy the GPUs and then they lease them back off them to get to so they can have a revenue stream and an income stream, so they can offset that. But this is just challenging. I mean, Core Scientific haven't got to go out and buy any GPUs for their contract. They've been given $550 million from CoreWeave in advance to go and refurbish the facilities that are required to deliver these 5 data centers that will host the GPUs.
Yep.
CoreWeave then negotiate the energy contract with the energy provider, and all Core Scientific going to do really is manage the facilities, and you'll have CoreWeave staff in those facilities managing the GPUs. So that's a great deal. That's a great deal because you've got less risk in these here. You want to see that AI cloud services revenue line, increasing. At the moment at sort of like $1.3 million a month. That's a sort of an annualized revenue of about 15 million, which gets you to 30 million after 2 years, which is what they invested in the GPU. So probably around the 2 years, but it doesn't cover, like you say, staffing, facilities, and then the energy. Although the energy cost is quite low, it only represents 2% of the monthly revenue. It's still a cost that you've got to incur for every month that you're using it. So you're eating into your third year before you've got to your third year. That's what I'm trying to say.
Yeah, I'll bring up the Core Scientific slide next, and then Bit Digital, because I want to spend some time. I think this is an important narrative, you guys, is comparing and contrasting the different approaches to HPC, because we hear this blanket statement, oh, we're getting into HPC AI, but there's very important differences between these models. We just got a note here that the IREN price is moving. I'm just looking at my phone quick, you guys. Bitcoin miners in general are recovering pretty nicely. Wulf's up 5% now. We have IREN up 1%, Core up 2.5%. So that's nice to see. My only other comment on IREN, Anthony, before we go over to Core Scientific, and I want to get both of your opinions on this. Right now, obviously, megawatts, infrastructure, access to power is very finite and difficult to find and carrying a premium. However, we know these hyperscalers are able to build out greenfield sites in 2, 3, 4 years. So I would expect, and again, supporting the CoreWeave 12-year contract, over the next 3, 4, 5 years, do you think the price of HPC or AI compute is going to come down as these new massive data center facilities are coming online?
I think it's going to have to. You saw the same thing happening with web hosting over the years, where in the beginning you were paying $100 a month to host your website. Now you're paying $1, maybe $5 a month. So the pricing is going to have to come down on those. And the interesting part, people talk about the megawatt shortage that's out there. I'll just draw up this example here. Tesla or Elon Musk with his X AI system that they just brought that on within like 3 months. I think this is in Memphis, Tennessee. Is it Memphis, Tennessee, or Kentucky? I can't remember where it's at. But they brought that on so quickly. And that's, I don't know if I don't think they had a brownfield there or a greenfield there. I think they just bought a facility, retrofitted it, put in the extra megawatts that they needed to run this. I think it's like 100 megawatts or something like that. But they're going to have now the most advanced HPC AI supercomputer out there that's available anywhere. So that's kind of where I'm looking at things is, okay, yeah, people are saying that there's a shortage, but how big is the shortage actually? And then also with the hyperscalers can easily buy out one of these mining machines or miners and basically get rid of all the Bitcoin mining, put in their own infrastructure that they want. So that's kind of what I would expect to happen. I don't think any of these hyperscalers are going to go to bed with any of these miners.
And that's where I'm worried with some of these vertically integrated approaches here, like IREN. You put in all this CapEx up front. You're not sure on the payback cycle. You're not sure on the technology upgrade cycle at this point. And if the price of these services starts to come down as more compute comes online, you don't have those long-term contracts, I just I get a little bit worried from that standpoint.
Take a look at also what is CoreWeave doing. CoreWeave is doing basically the same thing that Amazon AWS is doing, Google or Microsoft Azure, right? They're doing the same kind of thing. They're spending the money to build out a data center, then to have customers go in and pay them for the usage of that data center. So it's the same kind of model there. The companies that we're seeing with like Bit Digital and not sure what they're using their AI for. It could be just regular learning or something like that. But these are much smaller contracts that we're seeing for any kind of AI stuff. So IREN has one with Poolside, right? That's only a small contract there. It's short term, and that's I mean, there's a positive to it because you can charge a little bit more, but there's a downside of it too because it's not consistent at that point.
Well, and the poolside contract just actually ended. So with that being said, Anthony, you were just walking through some of the core details here. You've often referred to this as the deal of the year. So I put together a nice little slide here. So what this shows is for the currently agreed 382 HPC megawatts below, you can see kind of the first through 13-year revenue, expenses, profit. So you can walk through that for us, Anthony. Really supporting why we think this is such a great deal. And then up top, they've extended the option for the additional 118 megawatts that would bring it up to the full 500. So Sebastian, I'm curious to get your thoughts. Do you think that's a stall tactic? Do you think it's going to CoreWeave? And why would they extend if CoreWeave didn't want it? But I'll pass to you first, Anthony. Maybe you can just walk us through some of the highlights here and why this strategy for HPC gets you so excited.
Yeah, I mean, over the 13, 14 years, because it's in stages. The first 200 megawatts was done. That starts sort of at the beginning of 2025. They then increased by a further 70 megawatts. Then they increased by a further 112 megawatts to get to the 382. But this table here shows all three effective contracts in one go. So we're looking at sort of like they've shown it in a 13-year period. Now, the interesting thing here is the capex that CoreWeave are going to supply to Core Scientific is $575 million, and that will be paid back effectively in the first 3 years. So they'll only recover capex at 50% of the revenue received. So if they receive $400 million of revenue in year one, then the capex credit will be half of that. So using 400 as an example, the capex credit will be 200. It's actually 392, and 196 is the credit. So that so even in the first 2 years, where you're paying back all the upfront money that you've borrowed to deliver these sites, you're still going to make a margin and a margin of 30% when you're paying back, literally half of the capex. Year 3 and onwards from there, your then margin goes up to 63%. And this is a margin after all costs have come out. And by year 4, you're at 80%. So the high level figures are this contract, over a 12, 13-year period, 6.7 billion. Your expenses at 1.34 billion. And the recovery of the capex at 575 million gives you a net profit of 4.785 billion over 13 years. And you're wondering why all the other miners are looking at this deal. That's why they're looking at this deal. Now, yes, we've not started the revenues yet, and 13 years is a long time, and things can happen there. But this is the first big deal that's signed out there. We really need to see, if we're to sort of, believe the hype and believe what the miners have been saying in terms of the discussions now are all around HPC, not as much about Bitcoin mining. Who's going to be the next miner that delivers something similar in terms of a really good size deal, maybe anything over 100, 150 megawatts to a client. And, we've heard that TeraWulf potentially when we were in Nashville, they were probably going to be the next ones. We've heard CIFR's name mentioned as well. And both of those companies have been really gearing up to sort of delivering a HPC, but we've not had an announcement yet. So, if I was to say, how does this space look from a HPC perspective? We really need another miner to announce a similar contract and to show it's not just a one one contract deal, and everyone else then is just scrambling. But the fact that and Sebastian Quantis, the fact that the extension of the time frame for CoreWeave to access the additional 180 megawatts has been extended by a month, that gives me sort of like a feeling that, you know, that the likelihood is that CoreWeave will take up the whole 500 megawatts.
Yeah, I can have the same thinking on that one. Maybe CoreWeave was looking at other sites with other partners or something like that, and they're just giving them a little bit extra time to make a decision which way they want to go. But yeah, I mean, like Anthony said, this deal that CoreWeave and Core Scientific did is, I think, one for the year. I don't know if we're going to see another one. I'm almost willing to bet that we won't, because I've also heard that Amazon just spent 35 billion just this past first half of the year on building out their infrastructure, their HPC AI, and they're spending another 30 billion here in the next, basically, well, now it's only like 3 months left of the year. So the hyperscalers are going to be building out regardless what the miners are doing. It's the smaller players that are going to be the ones that might be going after the miners here with HPC plays, whether it's going to be short-term contracts, 1 to 2 years, something like that, for them to build out their language models, whatever it might be. Or as me knowing, having a little bit of software development background, I would go with like Microsoft or Google with their TPUs that they have, or even Amazon AWS to build out. If I'm building out an application that's going to be accessible to maybe tens of hundreds of millions of people, you need that scale, and those hyperscalers can provide that scale for you. Whereas some of these smaller guys here, like IREN, CIFR, TeraWulf, cannot do that, unfortunately.
Well, and it's an interesting point because this 12 or 13-year contract, it insulates Core Scientific from 3 more halving events and the expected boom bust bear cycle of Bitcoin. And you're exactly right, Sebastian. If these hyperscalers start to flood the market with new AI HPC capacity and the price of that compute goes down, Core Scientific doesn't have to worry about that, or if their price of energy goes up. So I really feel like this is a slam
The other
dunk.
thing you should note is obviously Core Scientific already have a deal. They're all delivering this service to CoreWeave in another facility around about 16, 18 megawatts. So they're already a partner. So they've got first hand of seeing what that partnership works like. And that would have been, you know, enough to give them incentive to go for something bigger. And bear in mind, over the last 3 years, Core Scientific have mined the most Bitcoin of any miner. So in terms of, you know, managing large-scale data centers, they're probably one of the best in the business anyway. They already had a great CV in this space.
Yep.
Yeah, pretty smooth operators for sure. So with that being said, now I'm curious to kind of compare and contrast that to Bit Digital, because they've almost got a hybrid approach. They've leased the GPUs, so they're more vertically integrated than, say, Core Scientific, but they haven't gone as far as actually purchasing their own data centers or just straight up purchasing these H100s. So they've got yet a slightly differentiated business model as well. Still great contract, producing a lot of revenue. Anthony, I know you can talk about the delay in the upscale there as the client maybe looks at the H200s. But curious to get your guys' thoughts on this one. And Anthony, interestingly enough, you talked about the panel with the 5 CEOs there in our intro. I included that on the Bit Digital page because obviously Sam Tabar was included, but that was the panel that Anthony was just talking about in the intro there. If you guys weren't able to watch, definitely worth an hour of your time.
Absolutely. The good thing about this from Bit Digital is they were the first ones to announce any decent sized client. So we knew that the likes of Hive Digital and IREN were sort of in the space getting smaller amounts of revenues. But when Bit Digital came to the table towards the end of 2023 and announced their contracts with their client, who they can't name for legal reasons, it wants to remain anonymous, they announced a contract that initially was for 35 million, then went to 50 million, then went to 92 million. Now we're already at the 50 million annualized revenue, so they've been pulling, you know, over 4.3 million dollars per month for the first 8 months of 2024. They should have in August increased that probably closer to $7 million, maybe slightly more than $7 million. But they did announce that the client has decided to look at choosing the a more up-to-date GPU. So Digital now are trying to source that in place, and that could take 2 or 3 months. So the contract's still there. They've even took on another client in the interim, so they still have capacity for another client, and with this client, and when they get the new GPUs in for their current client, they will get to their $100 million annualized revenue, which was the target they set. So they still anticipate getting that 100 million annualized revenues by the end of the year. And in terms of revenue, that's 100 million to Digital is more than twice the amount they're going to achieve in Bitcoin mining this year. So they're probably on track to achieve somewhere around about 40 million in Bitcoin mining if they maintain their level of hash rate at the moment. But 100 million HPC really shows where their focus is on. And Sam's been very clear about this. He feels that the market's not really giving them the same amount of love for their HPC that they're doing, that they should be getting. And he reiterated that on the panel yesterday. Yes, it's not the deal that Core Scientific and CoreWeave have got, but this is the deal that's already paying out. We haven't seen we haven't seen a penny of revenues coming through from that deal with CoreWeave yet. That will start in 2025. This one's been going on for the last 8-9 months. So this, has put some really good space. And when you compare market capitalizations, Core Scientific's market cap's probably in the region of about 6 times more, or 6 to 7 times more Digital's market capitalization. So we're not talking about miners in the same space here, but this is a great deal. I like it because it's all about margin. So they get a margin on the energy, they get a margin on the GPU revenues there, because they lease them. So there's a margin of everything's on a margin for them. And if you look at their balance sheet, probably one of the strongest balance sheets of all the miners. They've got zero debt, no debt on the balance sheet. They've probably got close to 170, 200 million in terms of cash and Bitcoin and Ethereum, depending on where the price of Bitcoin and Ethereum is. I know it was probably closer to 200 at the end of August, but we've seen the Bitcoin and the Ethereum price drop a little bit then. So I'm going to say, above 170 million. So for a company that's market cap's around about the 400 million, you've got an enterprise value for this company of around about 230, 220 million dollars, and it's delivering 100 million just in HPC by the end of the year, annualized revenues. That's like saying Marathon at 4.5 billion. Can you deliver 2 billion, 2.5 billion in Bitcoin mining revenues by the end of the year? No, you can't. Nowhere near. But they're getting a different price premium on their share price than Digital are getting for what they're doing. So I do sort of sympathise with Sam. I do think people need to have a little bit more look at Digital. They've certainly got attention this year. We've obviously included them on the channel for the last, I've included my analysis for the last couple of years. So, there's a lot of information out there about all these mining companies now, but I certainly get people to pay attention a bit more to Digital.
Yeah, it's an interesting point you bring up, Anthony. And Sebastian, I'm curious to get your thoughts, because one of the key differences with Digital is their Ethereum exposure. So Sam has many times said to us he would like to be the MicroStrategy of Ethereum. Perhaps this Ethereum exposure is making people shy away from the story, or the HPC exposure itself. What's your thoughts there, Sebastian?
Yeah, so I think they are undervalued, as Anthony was saying. I think they should be probably at least $2 higher from where they are right now. They're not being valued on their Bitcoin mining, really, because, what are they under? Like 2.5, 2.6 exahash in Bitcoin mining. Their goal was to get to 6 exahash by the end of the year, but that's been kind of pushed back. I haven't heard anything new on it. So I don't know if they're going to be maybe next year transitioning. No
growth this year, Sebastian. That's
no
it.
Growth,
They're focusing on the HPC at the moment. And Sam's been quite clear that if the Bitcoin price gets to 130,000, then they refocus on Bitcoin mining, because that's when the margins will start to equate to where they're currently getting on HPC at the moment. That's what the Bitcoin price would need to do.
But is it going to be a little too late at that point? You might have, a couple of months where Bitcoin's at that price, going up to 150, 180,000, and then coming back down. So if you want to be in that play, you really need to have the machines in place now, I think, or at least getting machines ordered. But nonetheless, I think the reason they're not getting the love maybe so much is because they don't have a moat. They don't have infrastructure. They're asset light when it comes to all this stuff. And I think that's maybe a little bit of a detriment to them, unfortunately. But I agree. They're a great company. They run great. They have a great customer there with the HPCI business, but it's not something that somebody else can't do what they're doing.
I'd actually, Sam's come out in recent weeks and started to talk more about they are looking to purchase their first infrastructure site to deliver HPC. Watch this space. That was what he said. So we are watching this space, and you know that on that slide there, it says they've got $216 million in treasury, which is cash and cash equivalents sat in their treasury in their bank or wallet. So they've got a great runway. They don't have to go out and borrow, you know, significant amounts. They're not going to get, you know, a deal like the CoreWeave deal, but they can go out there and maybe, you know, get a site to start delivering further HPC outside of Iceland, maybe, and they've got a serious cash runway to do that.
Yeah, great commentary here, you guys. Next one up, I want to talk about CleanSpark in a second, but Bitdeer. This is one that the more I learn about this company, you guys, the more I like the story. I really feel like this could be an emerging player or hyperscaler on a global, I guess, global stage. They've also got the R&D division. They're building the seal miner in-house. They're able to compete with the best rig designers or manufacturers with their first iteration of the seal miner. And we've heard from a number of other CEOs, Anthony, that they feel Bitdeer really has a strong contention chance in the hardware development side of this industry, speaking very highly of their R&D team and of their ability to produce hardware. So Bitdeer, curious to get your guys' thoughts here. I pulled up their recent August production results. Interesting to get an update on Bhutan. They've also got a massive pipeline in terms of total power available. I really think this is a diamond in the rough here. What are your thoughts, Sebastian?
I would agree to a certain extent. I think the growth that we're seeing this year is kind of limited. I think they're saying, what, 13, 14 exahash by the end of the year that they want to get to with the newer Seal A1 miners. And then they do have a nice pipeline of getting newer machines built out also next year. So that should be good. But a lot of the growth is going to be in probably like the second half of 2025 when their sites are coming online at that point. And we'll see where Bitcoin cycle is at that point. Are we close to getting peak of Bitcoin cycle? Are we, you know, halfway there? We'll have to wait and see where that plays out. And if they can install quickly, that might be a huge benefit to them while we're still in the bull cycle, I think.
Do you think they will miss
agree.
that window? Sorry, Anthony. Sebastian, do you think this will be too late for this cycle, personally?
That's kind of what I'm thinking it might be. Depending how quickly they can build out in all the regions that they're building out in Ohio and Bhutan, everywhere else that they're building out, if they can get even started in like late Q2 or something like that of 2025, I think that would be a good thing. But anything beyond that, as you're getting into Q3 and Q4 of next year, that might be a little too late.
Sorry, Anthony, feel free to jump in here. I'm curious to get your thoughts.
I like Bitdeer, probably the most diverse miners we've got out there, where they're building their own machines, they're doing hosting, they're doing mining, they're doing HPC, they're doing AI cloud services. So they've got lots and lots of different revenue streams, all bringing in very good margins. Sebastian's hit on a really good point there about next year. So the growth to this year, I've got them down at probably around about the 12 exahash when they bring in these additional miners, the Seal Miner 1, to increase and sort of replace some of the existing miners they've got, because their actual efficiency at the moment is probably one of the lowest or in terms of, in a bad way, the lowest. It's over. So I think it's around about the 32 joules a terahash.
Yeah. Yep.
So it's not great when you compare that to IREN, who's at 18, and we're going to see another miner go under 20 imminently when CleanSpark announced their extra 5 exahash this month when it comes online. But the issue next year for Bitdeer is one thing only. It's about capital. How much capital have they got, and how much can they raise to get to fill those sites that are going to be coming online? So they've got sites in Bhutan, in Norway, in America. They've got some really big sites. They've probably got one of the biggest portfolios of land and power of all the mining companies, and if an update there, it's 2.5 gigawatts. Even Marathon are at 1.1. These are at 2.5, and this is 2.5 of sites that are being, mostly sites are being developed. If they're not operating now, they're being developed. It's not like there's a field somewhere in Texas where we might start doing something in a few years' time. This is actual sites that are being developed now. But to develop these sites and to get mining machines or HPC in those facilities requires a lot of capital. And Bitdeer haven't got the same levels of capital that a Riot or a Marathon, or to a certain extent, maybe a CleanSpark and an IREN have. And this is the challenge. They're a Singapore company. So they've just closed their convertible note for 150 million, and they increased it to 172.5 million, but at 8.5%. Now, Core Scientific took out a convertible note in the same month, and they took 460 million out. This is the company that came out of Chapter 11 on the 24th of January and paid 3% interest on their convertible notes. So the market saw the core Scientific notes as not as much risk as the Bitdeer notes, and so Bitdeer are paying that they'll be paying 8.5% interest. Now that's a good interest rate. If you look at what some of these miners were paying in 2022, 2023, I can tell you now, even the likes of Bitfarms, who we have no debt on the balance sheet now, they were paying 18, 19, 20% on some of their loans during that period. So 8.5% is actually quite a good deal. But it's not a good deal when you compare it to what Marathon are just they're going to pay on their convertible note. I think it's 2.25%, and they've just issued, I think, 300 million, of which they use most of it to buy Bitcoin itself. Then we've got the deal with Core Scientific, and it'll be interesting to see if we get the likes of a CIFR or a TeraWulf announcing a big HPC contract, what they will do in terms of raising capital. But capital is going to be the bottleneck for Bitdeer. Yes, they can produce their own machines, which will be cheaper than going to a Bitmain or a Micro BT or a Canaan, but it's not going to be that cheap where they're literally paying just a fraction of the price. They'll be saving money by doing themselves, and they are capable of doing it. I mean, Bitdeer were part of the Bitmain group up until about 3 or 4 years ago, but they need significant amounts of capital to develop these sites and fill them with machines or with GPUs next year, whichever route they take in terms of strategy. And I think that's where the bottleneck will be. It's how to get access to that capital. And the fact they're a Singapore company means that, in the same way that IREN initially had difficulty raising money, the market's got to get to know the company before there's enough liquidity being put through that company. I mean, IREN have been, they've been listed for nearly 3 years on the Nasdaq, and it's only this last sort of 12 months where they've really benefited from using their ATM. Bitdeer have an ATM. I think it's about 150 million, Sebastian. I'm not sure if you got the exact figure, but I think it's around about 150 million. They also had issued some shares and warrants to Tether and raise money that way. So they are looking at different ways to raise money, but 100 million here, 150 million there. This is 172 million. This is fractions of what they need for next year to get that sort of 40, 50 exahash, which they've got in their growth strategy.
The thing that could help them out, though, is if they start selling these seal miners, especially like the seal 2 miners, the A2, that are more efficient than the current ones. If they start selling those in mass numbers, that would help them out.
It's an option, yeah. I mean, the thing is, though, it's who do you go with? Bitdeer? Do you go with Bitmain? And a lot of these companies have got long-term relationships with Bitmain, and maybe not long-term relationships with Bitdeer. So I hope that Bitdeer do everything they say they do. I really do. But I just think if there's one sort of downside to everything, it's just about how they get the capital to deliver what they want to deliver. That's my only concern. Everything else is perfect.
That's fair. And we can talk about that partner level financing, some innovative capital ideas with Soluna as well. But next up, I want to talk about CleanSpark. A lot of news coming out there. I think your dog might be whining. Sebastian is so excited about CleanSpark here.
She's been waiting for that one.
she heard about the jet and was hoping to get a little ride on there. So
Hey,
I want
Bryce, what? Here's a question for you. What would happen if me and Sebastian's dog was in a house and it was on fire? Who do you think Sebastian would say first?
You were the dog? I don't know, buddy. I don't know.
This was the question. This was the question.
Yep.
I actually listened to a bit of his podcast the other day, and I think there was like 3 or 4 questions around me and you, Bryce. So I was just like curious to what to how. I think I heard Sebastian's answer. He put the dog on me and drag us both out, so we're both saved.
Yeah. But if it was between you and Bryce, I think I would have had to pull Bryce out, because Anthony, I think you weigh a little bit more than Bryce does.
I'd be a little easier on the back, buddy. I also saw apparently nobody, they listened to the program for you alone, Anthony. They're not here for me. So I'll try and keep her brief here for you guys. Whoever said that comment hurt my feelings a little bit. Nonetheless, CleanSpark, you guys, just came out with another announcement. So they've really been on an M&A spree here. The tail of the tape for me, CleanSpark, obviously a very strong operator. This is one of my largest positions. They had all these option orders on all this equipment. They didn't have facilities, but they've been slowly piecing that together throughout the year here quite effectively, I think, Sebastian. So they're adding another 5 exahash based on today's announcement. This just came out this morning. Curious to get your thoughts on CleanSpark overall and this kind of diversification strategy. At some point, I do think maybe you have too many sites, but I don't know if they're there yet.
Yeah, I don't know if they're there yet. I think this is great news, right? They ordered machines to get to 50 exahash by the end of the year. Deliveries are coming in. The original goal was to get to 32 exahash. This now adds another 5 exahash for them. So now we're at 37. I wouldn't be surprised if we get to like 40 exahash by the end of the year, the way they're going right now. So they have everything in place that they need to get there. And then possibly by Q1 sometime, we might get to 50 exahash. We'll have to wait and see. But this diversification in the assets or the locations they have, I think it's pretty good. The good thing is most of the facilities are pretty close to each other. So, I mean, the facilities can pretty much run themselves for the most part. You just need somebody that can possibly service like 1 or 2 facilities. If there's something going on, swap out some miners, bring those miners back to get fixed, right? So you're not really dealing with a lot of overhead there if you can do it that way. So I think this is good.
Can't possibly run themselves, Sebastian. Otherwise, they wouldn't have bought a jet so they can get to all these sites and help them run well.
Yeah.
No,
for the most part, they run by themselves, but you do need some people there to obviously take care of them. But for them, it's more, I think, the travels, and I'm okay with it.
Have you looked into the memorandum? Have you looked into the memorandums and see if shareholders are allowed to use the jet, Sebastian? That's the big burning question on my book at the moment. Can I, as a shareholder in CleanSpark, full transparency, can I book the jet in October maybe for a trip?
Yeah, depending on the amount of shares you own, you might be able to get on there for a minute and then you have to get off.
I will answer that question. The answer is no, Anthony. You will not be on the jet in October.
Unless you're invited with them.
But I do support it as well, Sebastian. I don't think there's any problem with that, and I would be doing the exact same thing if I was in their seat. Now, I'm curious to get your thoughts, Anthony. Well, not on the jet, on the strategy here more so. CleanSpark
I like the strategy, they've done what they said this year. They're going to, looks like they're going to get to their target. They certainly wouldn't have said today the increase from 32 to 37. If they felt they weren't going to reach the target, this would have been 5 exahash to get to 32, and nobody would have been none the wiser. Nobody would have been none the wiser, because end of the day, they were still looking for facilities to get to that target. They've got expansions at Sandouville and Dalton that will help them get there as well. And we'll see, as I say, more hash rate come online now, reach 23 during August, set to get to 28, 29 by the end of September. And then, the last 3 months of the year to ramp up to 37. And Sebastian, you might be right. They might even announce, if they've got these miners coming in and they can get these sort of like ready to move into, turnkey facilities where, the previous incumbents just couldn't make a margin out of it. I mean, CleanSpark, run a good ship. They're one of the sort of like, the best operators. They generally have, reasonably good power rates there, good margins. Even with the hash price at the moment, their margins are probably in terms of mining margins, probably close to 50%.
And Anthony, just to pause on one thing you said there, interesting takeaway again. This is why I love getting your thoughts on the press releases. So you're saying, I guess in British terminology, it was almost a cheeky move by increasing the guidance as well. They could have just used this 5 exahash towards their existing target and kept that upgrade, but they're so confident that they're going to hit it. They said, hey, we're just going to increase it right now.
Yeah, you know, when we've seen IREN and Riot tell us their target from the sites that they've got, that they're building on now. You can see the construction going ahead day by day. But the likes of Marathon and CleanSpark didn't have enough facilities to get to their targets. So we had this conversation even with Matthew. And remember, Matthew came on the podcast earlier this year and said, look, you know, we had 20 different options on the table and we were discounting options and looking at which ones had credibility go forward. And we'll go through those options and see what we can deliver. So, you know, they were doing their due diligence, you know, all the way through 2024. It looks now that due diligence is proving to be fruitful because, you know, these facilities are costing, you know, about 324,000 per megawatt. And we said this before about, you know, about miners, what they're paying in terms of infrastructure, what they're paying in terms of miners, how much would it cost to get effectively like, you know, and for each exahash, because we talked about a floor price of 100 million. And so, you know, if you can coming in, it costs lower than that there, and this is obviously significantly lower than that, even with the mining machines, then why would you go out and buy another miner if you can do it cheaper yourself, just grow organically? Yeah. But yeah, I think by saying going to 37, I think they know they're going to get their original growth plus this 5. So I think it's pretty much in the bag. It would be poor choice. I mean, if I felt there was any chance of, and I was in their shoes, any chance of not making it, this is my banker. I'm going to get to 32, and hopefully we'll go over 32, but we'll definitely get to 32. Yeah. They've gone now, said 37. So like IREN did and went to 30 when we said. We were amazed we were going to get to 20 by the end of the year, which now looks a bit, you know, short-sighted because they'll get to 20 by the end of September. So, yep. I think CleanSpark with this announcement fit into that bracket with IREN and Riot, and they'll get to their target by the end of the year, the new target.
There you go. Was that a correct use of the word cheeky, Anthony? Would that be the correct terminology there?
Patetra.
Excellent. I even sometimes say goodbye, mate. I'm even learning some new terminology through that as well. Now, TeraWulf is another one. I'm curious to get your thoughts, specifically you, Sebastian, because Anthony and I talk about TeraWulf a lot. This is another company that we've heard a lot of rumors about a hyperscaler partnership. TeraWulf is always in that conversation. We've had some great discussions with management. I pulled this up. This is from their production and operational update. Some of the speaking points talking about the Wulf Den as this proof of concept project for Wulf Compute, which is obviously going to be their HPC AI arm or division. Another miner moving into HPC, another miner that has strong operational ability, a great balance sheet, paid down their debt. What are your thoughts on Wulf right now, Sebastian?
Yeah, Wulf definitely has the potential there. They have a great facility that have access to water and redundant electricity too if they need it for HPC business. So that's why you're having all that hype around them. And yet also 2 well-known investors get into them. Was it Colin and what was the other one? Drunken Miller, whatever he's called. I can't remember what his name is. Those guys have gone into it. So that's kind of what spurred the shares going up higher recently, at least.
Yeah, we covered that briefly on our channel, Sebastian. How much weight do you think that throws when you get huge institutional investment names like that purchasing or interested in your stock?
Oh, people follow at that point, right? I mean, if you just look at the numbers right now compared to the other miners on Bitcoin mining, they're way overvalued on that. So it is having a huge impact on their stock price. We'll have to see what they're going to get.
Yeah, they are way overvalued. I agree with that. That's way overvalued in terms of the fact they've got 10 exahash. Yeah. What the market might be pricing into this is an imminent announcement about a HPC contract. And if they deliver that, then you know. But if there's no HPC, I mean, even on today's prices, they're actually their market cap's higher than IREN. And I just, for the life of me, can't work out why at the moment. Not what was he today, but potentially, I see I've said already before you came online, Sebastian, I think TeraWulf will be the next company to announce a sort of what I'd say is a reasonably big HPC hosting contract, because they've took away any growth for next year. They're going to get to the 13 this year, but they had targets to go to next year before they started talking about HPC. And Patrick says no target for next year on Bitcoin. We're going to keep 13.3, and we'll look at utilizing our power and infrastructure for other types of business.
Yeah. Well, they have the Amazon next door to them, right? Building out over there. So maybe they're in talks with Amazon. Who knows? For their
So maybe the market's priced this in, because that, for the life of me, I don't know how. I looked yesterday. I think Bryce we had the chart up on yesterday's podcast, and I think it was like 1.8 billion TeraWulf and 1.6 for IREN. I'm like, why is that like that? It's IREN have got 16 exahash and going to go to 20. They'll have double the exahash at the end of September, and now they've got out of that energy hedge deal. They'll be able to produce energy. They produce Bitcoin cheaper than TeraWulf did in August, by about $6,000 a coin.
Yeah.
Hey, I wanted to get your thoughts, Sebastian. How are you for time today? Actually,
let me see here. Got maybe another 5 minutes or so, 5-10 minutes.
Sure. So maybe we'll do 2 more with you. I wanted to get your thoughts on Hive as well. This is another HPC player. They've obviously got their own strategy, kind of the vertical integration approach. I would say more similar to Bit Digital or something along that IREN kind of lines rather than a CoreWeave deal.
Yeah, IREN Hut 8, I would say.
Yeah, so that was actually going to be the next one too, is Hut 8 and Hive. So let's get your thoughts on Hive quickly, both of you, and then we can jump over to Hut 8 as well.
I love Hive, what they're doing just operationally. They've been in this business for a long time. I invested in them back in 2017, got out of them just last year. That was my fault. I didn't take the profits on it when I should have, but they're a great operator. I can't take that away from them. The only thing that I have that is kind of maybe a little bit of a nick at them would be their growth going forward. They just want to maintain 1% of the network hash rate, which is fine, but they're definitely not looking to compete with being one of the big boys in the top 5 miners or something like that. That's the only thing I can see that's maybe negative there.
Anthony, what are your thoughts on Hive? I know you've commented about their growth targets as well. Similar to kind of what we've seen with Wulf positioning themselves towards HPC.
Yeah, I mean, operationally, Bitcoin miner, there's only Bitfarms who competes them at the moment. So the last 4 years, they've delivered month by month from a mine perspective. I agree wholeheartedly with Sebastian. Their growth in mining strategy hasn't been as good as their peer miners. I mean, bear in mind, go back to 2021, 2022. Hive had the highest revenues both of those years in terms of mining revenues and Ethereum mining revenues. And when Ethereum went to a proof of work, it just stopped for them overnight. They were earning $7 million in the month before the fork, and I think it went down to like $200,000 a month after, from mining alternative coins with the GPU. So that was a big drop in revenues. And then they've looked to go into HPC space, and they're on a similar trajectory as IREN in terms of HPC. Now, they've announced a big deal for a site in Paraguay, and today they announced they're going to get to about 13.5 exahash, but this will be it by the time that site's completed. So we're looking at maybe about 12 months from where we are today to get to 13.5. I mean, I think they had a target at the start of this year to achieve 8 by the end of the year, and they're at 5.5 at the moment. They have been refreshing their fleet, so their fleet efficiency is down to 23. So only CleanSpark and IREN have got a more efficient fleet than Hive in terms of efficiency at the moment, and that will continue to go down as they increase their hash rate once the Paraguay sites start coming on. And it comes on in stages. It's not going to be 100 megawatts at the end of the year. So they will get some hash rate as they start building the buildings in the same way, like, think about the Corsicana site, but on a smaller scale. As they build out the buildings, those machines will start coming online. And so, you might see, after, say, 5 or 6 months, some of that hash rate coming online, and it'll go then in sort of phases after that. But I was expecting, probably like a lot of retail investors, maybe more. But what Hive have done differently from other miners is they've tried to grow organically without going down and using the ATM to any significance or using other debt levers to grow. So they have tried to grow organically. They've been selling a little bit of Bitcoin. They've got a really good, for the size of the company, they've got a really good hodl. They haven't got a great amount of debt on the balance sheet. They have got debt on the balance sheet. They're not like Bit Digital. They have got an amount of debt on the balance sheet. But when you look at their enterprise value and look at their current hash rate, they are operating at the moment at literally $30 million per exahash.
Mm-hmm.
And if you look at, we just talked about TeraWulf for over $100 million a terahash. So the only company that comes close to valuation with Hive in terms of hash rate at the moment is Riot. Riot's enterprise value to their hash rate is also about $31. So those two are neck and neck. And if you look at it from the end of the year, actually Riot then becomes effectively the most undervalued miner, because if they get to their target of 36 exahash, that figure comes down even further. And so, if you look at valuation metrics, and I've done an article which might have been published today or it's published this week, that will highlight 5 valuation metrics for all these miners. And the likes of Hive and Riot do well in literally all those metrics. So if you're consistently looking undervalued in more than one metric, then there's probably more to it, that meets the eye. And so people need to do a bit more research. But I like Hive. I like Hive. I just as I say, I've just been disappointed with growth. But they've got their own business strategy, and it seems to be doing okay.
And Frank has said they run a very conservative ship. They don't want to be the biggest miner. They want to be a profitable, medium-sized miner, and that's what
they don't pay themselves pop star wages. They don't buy jets.
Yeah.
And so they've got one of the lowest SG&A costs of all the mining companies. So in comparison, when you look at, I'm not saying they should have a lower SG&A than Marathon, but if you look at it as a percentage of revenues, it's significantly lower than Marathon and Riot and CleanSpark and literally every other mining company.
Certainly is. Now, Sebastian, I know you've got 5 more minutes here, so I wanted to run through HUD 8 for your final thoughts. We'll let you go first here. Interested to get your opinion on their diversified approach. When you look at their total energy capacity under management compared to their actual Bitcoin production, obviously you can see HUD 8 is focusing on other opportunities. I know you specifically talk a lot about exahash growth and overall Bitcoin mining capacity. So I'm curious to get your thoughts on HUD 8.
Yeah, well, they have a great portfolio of a lot of things that they do: managed hosting, what else? They do? Mining themselves, HPC, data centers. They have a well-diversified business right now. And if you look at just their HODL to market cap value, their HODL is 54% of their market cap right now. So they're not being really valued on their operations when it comes to possibly Bitcoin mining and the other things. It's more on the HODL side of things, which is actually pretty high, being 54% of the market cap there. So, and they've been talking for quite a few months since Asher took over that they will possibly eventually, replace the old machines that they have there with the miners for the newer ones. They're waiting on the pricing to come down, waiting for efficiencies to improve. Well, if you're going to keep waiting on that, you might be waiting for a long time, because efficiencies are going to continue to improve on the machines. So you need to kind of bite the bullet a little bit and buy something to get in mining and start mining some good revenues, because their revenues have been coming down tremendously over the last just 9 months or so. In December, they were generating 19.2 million in revenue for Bitcoin mining. They're down to 5.2 million right now. So that's like a 75% haircut right there.
Yeah.
And it's only because they haven't done anything with their mining machines. That's a lot of loss in revenue there.
Yeah, it certainly is. I know you said you got a drop at Q2 here, Sebastian. So just wanted to thank you for joining us.
Yeah.
You guys make sure you hit the like button. Check out Sebastian's channel if for whatever reason you're not already aware of it. And have a great rest of your week, buddy. Thanks for the time.
Appreciate it, Bryce. Anthony,
Cheers,
as always,
Sebastian.
great to see you guys. See you guys next time.
Take care.
All right. Bye.
So, Anthony, we'll continue on here. We've got a couple more miners on the list. We'll probably go for another 15 or 20 minutes. Hut 8, we've talked to the team here quite a bit. I would say both of us are very happy with the transformation that Asher and team have made. But Sebastian brings up a good point. In terms of overall top line revenue, we're definitely not seeing the growth.
No, that's the sort of the disappointing side, that the self-mining, they haven't really increased any hash rate in terms of self-mining. I mean, bear in mind, 18 months ago, they were probably, they had 3 years ago, they had a higher strategy for the end of 2021 than they have in terms of hash rate at the moment. So that's been disappointing. But they've got the self-mining business, they've got the managed service business, they've got this great HODL. They do have about over $300 million of debt on the balance sheet. So, the valuation of the HODL is probably like 550, 600 million, but then they've got a 300 million amount of debt there. So that needs to be taken into consideration, especially when you start looking at these companies that have got zero debt, like Riot, like IREN, like Bit Digital, and they've got these, either large cash surpluses or large HODLs in their treasury. So, but I think we're waiting to see maybe an announcement from Hut on whether they start to increase their self-mining or they get some sort of a HPC deal. They've recently purchased a site, and they're quickly converting that site now, and it should be ready soon there. So whether they utilize that site for mining or for HPC, we'll wait on Asher. But he did say, judge me on Q3. Well, we're in Q3 now. It's got about 2.5 weeks left of Q3. So let's see what this brings. But the challenge for Q3 for all these miners, again, unless the Bitcoin price really, really rallies this next few weeks, is the fact that their revenues are going to be lower than they were in the last quarter, because this will be the first full quarter past the halving. So, you've got you had literally half of April was pre halving. So you had an element of where you were getting more revenues for part of the month. This last 3 months, there's no help from that. We've seen the revenues drop to, like you say, $34, $35 a petahash per day. It's around about 40 today, and maybe, hopefully, if it stays at this level now, might see a little bit of rise in that, because the Bitcoin price is over 57,000 at the moment. So we need that Bitcoin price to rally. It was certainly higher. I think it was like 62,000 at the end of August, and that's only 12 days ago. So we're still down on that position.
Well, the nice thing is it can move very quickly, as we've seen just in this podcast alone. A couple more miners we wanted to discuss here. Soluna, I made reference to them earlier in terms of their funding strategy. So similar to Hive and some of these other smaller companies, access to capital. When you have a $20 million market cap or $50 million market cap, you can't really use the ATM the same way you can as a $2, $3, $4 billion company. So Soluna does a lot of project level financing. Now they've come out with a $25 million equity purchase agreement. So this is another interesting angle here, giving John a little bit more dry powder, I guess, in his arsenal towards funding this growth. What do you think about Soluna, Anthony?
Yeah, we've talked about Soluna quite a lot in recent months. They do things on a slightly smaller scale than some of the miners we've already talked about today, but they're doing things in terms of where their market capitalization. You had a slide at the start, and the market capitalization is under $20 million at the moment. So when you start seeing sums like this one here, where it's entered into a 25 million equity purchase agreement, that's more than their market capitalization. Bear in mind, they've just signed off, and they'll start breaking ground for Dorothy 2 imminently now. There we can see there $16.57 million, and that cash flow available there is 25 million. But they have to go through a couple of hurdles to get to that, to start utilizing that. And it's not an interest free. I think on the first 10 million, there's a $700,000 charge against it. So you are paying a certain percentage against the actual borrowings that you're going to achieve. But I do like the fact that they do these projects. And so Dorothy 2, they've raised $30 million for that there to build the site. And then once the site's completed and it's running, there'll be some sort of a profit share. They've got Catty, Project Catty, which is another project on the go, and that's 166 megawatts. So that'll probably require a little bit more funding than we've seen. Maybe, this is the start of some of that there. They've got a balance here they can, put in themselves and look for a partner. But that's how they do things. They tend to look for a partner, attract the funding to the project, and then run the project. If people don't know anything about Soluna, go to the website, look at the presentation, look at the revenue streams from all the various projects that they've got online at the moment and those that are coming in over the next 12 months. Worth doing a little bit more research on Soluna. They're included in my article this week in terms of valuation as well. So have a look through the article. But do some more due diligence. I'm not here saying to buy any miners at all. So if I say just do some due diligence, just do a bit of due diligence about them. You make a decision whether you want to buy the stock or not. But I quite like how they do these smaller projects that are sort of like help with the funding, and they're not having to go out there and, like say, dilute further than they've diluted in the past, or go into getting debt at for a company this size, you might not be looking to get borrowings, with single digit interest rates. It might be higher, like 14-15%. So if they can do these smaller agreements, that's all the better.
Yeah, most definitely. Now, I want to come on to CIFR in a second here. We've seen a couple comments about them. Before we do, though, Gryphon, an interesting acquisition this month, getting access to 1 cent power. So Gryphon is now inching closer and closer to that 1 exahash milestone. A number of key developments here. This was a pretty big announcement from Rob and team. It does not look like they're going to get to their 6 exahash goal that was revised down from an optimistic 10, but nonetheless, still making some M&A moves and increasing the overall hash rate of the company.
Yeah, so they achieved the highest hash rate in August. Still under, obviously, 1 exahash, but slowly but surely. They're obviously very, very asset-light company. There's only like literally three employees, and they have their machines hosted by another mining company. So it's all about margins, all about making sure they get their mining machines, the most efficient machines available in the right facilities at the lowest price energy. So this helps them where they don't have massive amounts of SG&A costs to attach to it. So once you've paid your hosted fee, your energy cost associated with that, and pay the staffing wages, which is 3 of them, and then probably pay some legal fees and a small amount of SG&A, you've covered your costs, and therefore they've got quite a low threshold that the Bitcoin price would have to fall to before it starts becoming non-profitable for them to mine. But that's the trouble. The downside is to all these smaller miners is how do they grow significant from where they are? I mean, we've got IREN at 16 exahash now. When they joined the group literally just under 3 years ago, they were half an exahash. Do we see one of these smaller miners becoming an IREN-sized company in the next 3 years? I don't know. I think it's a different landscape now. I think there's going to be a lot more M&A activity. We've got like 30 listed miners at the moment. Analyst was saying a couple of years ago they could see that going down to 5 or 6 big Bitcoin mining companies delivering that type of hash rate. And so, we've asked these questions of all these CEOs. Do you think merging with a similar sized company or merging with smaller companies to sort of maybe grow organically that way and give yourself opportunities? Maybe one idea.
Yeah, most definitely. It'll be interesting to see how they navigate that. It definitely feels and seems like we're going down to that smaller, larger model. Also going to be interesting to see as these companies get bigger and bigger, if members like CleanSpark and Riot start to adopt their own pool, similar to what we've seen with Marathon. That's another trend I'll be curious to watch. Now, continuing along, we just had a question about SATO from Gordon. So thanks for asking that. Talking about SATO technology, so they had a fire a couple months ago. This graph here shows their production over the last 3 months. You can see same situation here as HUD 8. Revenue continues to fall as the price of Bitcoin falls, difficulty increases. Thoughts on SATO Technologies right now?
Yeah, I mean, in a similar way to the other smaller mines we've already talked about, the challenge is it's how do you grow organically, and how do you raise capital when your valuation is under 20 million? Even if you were to sell 100% of the company, that gets you to 40. In terms of hash rate, would that get you double the hash rate? That's the challenge. But they do things on, obviously they've got one site, they've got access, I think it's 20 megawatts of power. They want to grow. They've got a short-term goal of getting to 1.8 exahash, but that would be tripling their current hash rate from where it is now. At if it was all switched on at 560 petahash have installed. They're only averaging 440 petahash. So there's a gap there of 25% of mining operational hash rate missing, and that's been coming down. They had the problem in June with the fire, so the last 3 months we've seen the operating hash rate significantly lower. Bitcoin is down at 10 Bitcoin now, as opposed to probably double that at the start of the year. The all-in electricity cost there, 53,000. That tells you that's a challenge in terms of where the Bitcoin price at the moment. So if the Bitcoin price is at 57,000, their all-in electricity cost is 53,000. It doesn't give a lot of margin to pay the rest of the bills. And they do have a hodl, so they've got 43 Bitcoin in the hodl, which at the end of August was valued at 2.5 million. And they've got some cash as well, so they've got close to getting on towards 3 million in terms of treasury. But it's really about growth. How they're going to grow from here. So they're looking into HPC, they're looking into growing, they're looking into replacing miners to get more efficiency. But everything we've talked about there is all about how they're going to raise money to do that. So like a lot of small miners, I feel that M&A is probably the way that they should be probably thinking about how they grow. But bear in mind, a lot of these CEOs built these miners up from the ground, and they maybe want to try and do it on their own, and just may take longer than expected. Now, if the Bitcoin price really rallies and gets to 150,000, 200,000, that makes it a little bit easier for all these mining companies to sort of grow hash rate effectively, because there's more margin available, more revenues coming in. So, if the Bitcoin price is 200,000 and you're mining 10 Bitcoin, that's bringing in a lot more revenues than what they're getting at the moment. So, it's just size of the company that's the issue.
It's so incredible to have all these companies and industry just hanging in the balance of this commodity price. It reminds me so much of oil and gas coming from Alberta here, and so many of these small gas or oil producing companies that are just so dependent on the underlying commodity. Really why you need that balance sheet strength, protection, cash, and cash runway that we talk about so much on the channel. Now, I wanted to finish off with CIFR, but before we do, DMG, Anthony, second last video here, actually an update on their SOC 2 compliance. So we just had Sheldon and team on the channel, Sheldon and Steven. They were talking about their systemic trust and the abilities this opens up for the company, essentially allowing them to be a third-party custodian for other people's crypto. So currently they can hold their own Bitcoin that they mine. This would allow them to hold third-party Bitcoin. And with their TerraPool and their green Bitcoin initiative, what this would allow companies to do is actually send and hold, transact in carbon neutral Bitcoin all through DMG's network and this new trust essentially that they're looking to put together. So the pieces of the pie came together for me in our last discussion. I see the vision. The problem is at this point, a lot of these endeavors, including the pool, are not generating revenue.
Yeah, that's going to be the issue. I mean, they've got so many good ideas. It's trying to deliver the revenues from each of these ideas. I mean, Sheldon's is pretty much like the OG in the Bitcoin mining space in North America. He was with the original Bitfury, created DMG, 2016, listed in 2018. So again, we talk about the oldest miners. You can sort of add DMG to that list of Hive Digital, Hut, Bitfarms. All these Canadian miners were out there before the American miners. But DMG, he set the business up there. He's been instrumental in creating lots of, he's got great vision. So they created the Mara pool, they created Terra pool. They've built, he's been involved in the building process for the Bitdeer facility down in Rockdale. He's built containers for miners for other companies. They were hosting miners when I started researching them 4 years ago. They were a host company as well as a self-mining company. So they've done so many things in this space. Sheldon was the first to do the white paper on immersion cooling as well. So he did the study on immersion cooling before everybody else. So when you hear about all these miners using immersion now, Sheldon was sort of like testing that out before all these other miners. And a lot of them looked at that report and realized there was potential in using immersion cooling as an option to using air cooled. And so, his name is synonymous with a lot of things. But for me, it's like, and I asked him this question on the podcast. If you haven't seen the podcast with Sheldon, then it's a good podcast. I did ask him a question about, you're sort of spread across so many things. Would it be better to focus on maybe 2 or 3 of the big things and try and deliver those revenues through there? Or do you feel there's an opportunity that we're not seeing at the moment, but maybe people were prepared to pay a higher premium for using carbon-free transactions? I'm not sure. I look at normal day-to-day life, and I think people now in the current economic climate, are a lot more cost savvy, and where they'll pay one price for a product. If they can get it cheaper, they'll pay the cheaper price. Not too overly worried where that deal's coming from. I don't think people are prepared to pay too much of a premium for something nowadays. We don't use as much cash as we used to do because of obviously electronic funding and the movement of cash around electronically. We can do it all through our smartphones now. But when we did have lots of cash around, can you imagine how much of that cash we were carrying in our wallets had been used in previous for illegal activities? So, people didn't have the same sort of, I've got this $10 or this £10 note in my wallet, and has it been used has it been used in a theft of a bank before or something like that? It's $10 or £10 in my wallet. So, I just wonder.
Institutional clients, I think, will care, Anthony.
Yeah,
for sure.
Maybe. But we bear in mind 2.5 years ago, when we saw Michael Saylor and the miners create the mining, to look at improving the amount of renewable energy in mining, and that has done well, but there's been no premium attached to any Bitcoin that's been mined efficiently. And if you look at the likes of DMG and Hive Digital and Bitfarms to a certain extent, I'm not sure about Paraguay now, but certainly the Canadian operations were pretty much 100%. Most of the Canadian miners are operating at literally 100% clean energy because of the amount of renewables in that location. Maybe not so much in Texas, but certainly in Canada, absolutely, or in certainly North America.
There you go. I do think that will be an emerging trend at some point. I don't think they're able to charge a big premium now, but I do think down the road that will be of value. So last one to bring us home here, CIFR Mining. Talking about an acquisition, 300 megawatts, similar to CleanSpark. They've gone out and acquired a number of smaller sites in West Texas. So we continue to see that concentration in the state of Texas, Anthony, which does give me some concern if there's ever a major natural disaster or issue or power outage in Texas. But that's for another story or another day, I guess. Take us home with CIFR. What are your thoughts on this one?
Yeah. CIFR, they're one of the most efficient mining companies in North America, and they, with that cheap energy and the ability, they're growing their Black Pearl site next year, which is going to bring them a lot of hash rate. they've also just purchased, just before this purchase here, they had, I think, 4 other sites, 3 500 megawatt sites and a 200 megawatt site, also with options to purchase there. This one here's, similar again, buying a big site with power available, 300 megawatts. It will help them deliver the potentially the high performance computing that they're looking to seek. He's made no secret about it in terms of wanting to go down that route, the route that Core Scientific have done with CoreWeave, and even to the extent that if they had a big enough offer come through, he changed the strategy on Black Pearl site and changed that into a HPC site if the revenues would come in quickly, and they could convert that site from potentially what it's going to be now with Bitcoin mining to HPC. So they've got a great team of with experience of building data center CIFR mining. So that's where they have strength and depth there. And one of the most efficient miners, great margins, low energy, and there's enough people out there saying really positive things about CIFR. Share price has come down quite a little bit since it reached $6 a few months ago. So I think it was under $3, certainly beginning this week. And but that's most of the mining companies are like that. But I said it's either TeraWulf or CIFR Mining will be the next mine that announces something. Maybe this is the prerequisite to them announcing something, coming out with this big site deal there, because this is significant amount of spend. Bear in mind, the Black Pearl site's big, and they're still working on that site to deliver that next year. So time will tell. But I think CIFR are well placed in this space to deliver more Bitcoin mining or move into the HPC space, because they've definitely got the team around them to deliver those facilities.
Certainly. Yeah. Similar comments from Tyler, as we heard from Paul Prager at TeraWulf. Everyone's got a price. And if one of these hyperscalers comes knocking on your door with a big enough check, interesting to see that these companies are happy to entertain that offer. And again, as would I.
There was rumors at Nashville that some large hyperscaler are coming to look to buy, and he wasn't discounting that rumor. He wasn't saying there wasn't a rumor. So effectively, I think they did receive some sort of an offer from a hyperscaler to go in there and buy, and everyone's got a price. And Tyler said categorically, "So we've got a price, meet the price." And so, as I say, this space, we're looking for the next. We need that next deal. We've spent time now, 3 months, talking about the CoreWeave deal. We need the next deal now to make sure that it's not a one-off. We want to make sure that actually what these miners are saying, where they're having 20, 25 calls a week all about HPC, when we're going to start see them delivering the HPC or planning to deliver it in terms of getting a site converted, ready to deliver that service.
Yep, that's it. That's what we're looking for. Another thing I'm looking for is Bitcoin price up at 57,775 now, Anthony. So nearing in on 58,000. We'll be interested to see how we close out the week, but so far so good for the miners and Bitcoin with the first 2 days of the week. Big ETF inflows and green days for the miners. So that brings us to our conclusion here, you guys. 2 hours and 3 minutes, Anthony. We were within 3 minutes of schedule today, which was great. Appreciate your thoughts, you guys. Thanks so much for joining us. Feel free to hit the like button, subscribe to the channel if you're not already. Sebastian, always a great host, or I guess supporting character on the podcast here. So thanks so much, Anthony. We'll see you back here tomorrow. Going to be hosted on Compass Mining Podcast, both of us tomorrow. So keep an eye out